With Netflix soaring after hours, it is time for instant reaction to Netflix earnings. Let's go off the charts with tradinganalysis.com founder Todd Gordon. Todd, you went in short Netflix, right?
Yeah, we were just talking about it. The general consensus is just it's been weak, it's been underperformer. The hard red edge of the chart is where buyers and sellers agree it's valued. And basically, I played the short side. I played the expected move. The option markets were pricing a $35 move higher or lower. I had a defined risk option trade on. It went the other side. We went out at about 350 to make it even. Add 35, that's ugly. Add $35, effectively we're at the expected move in terms of where option markets see it. We're back to the old October high, so we're at resistance. Are we out of the woods? I'm not quite sure. Let's just put it in context here. This is Netflix over the last couple of years, just a beautifully defined uptrend channel here. As you move towards the upper end of the channel, this is overbought. We continue to be overbought. We could go up and try to retest these upper areas, but again, the stock is not, I don't think, is going to break out of this uptrend channel. So we might see some short-term strength, but it's still overbought. I was playing for a move back down to this beautifully defined uptrend channel. So this is the weekly chart, and as we get down to the next chart, this is going to be the daily, and you're going to see, okay, fine, we're back up at these old ranges. This leaves us still very much kind of in the middle of this channel in Netflix. I have a hard time believing that all this underperformance, one number is going to break this underperformance out, and we're just going to go to new highs. I'm wrong in the trade, but I'm still not buying it. I do think with a little bit more participation in the broader market, we still might go down and test those lower levels. I just can't get behind it yet. Looking at the overall NASDAQ, though, this is very constructive. Again, kind of that same principle that we've looked at over the last 3 years. Beautiful uptrend channel here. And if you were to get inside of this right here, this is lower support. If you were to draw a candlestick, right, there's 4 parts of a candle. There's the open, there's the high, there's the close, and there's the low. If you can get the body of this candle inside of here, that would say that, okay, fine, it's supported. This candlestick tried to break below this support here. We're back above it. It's showing that support remains intact. As the NASDAQ could continue up towards those upper levels, I would say we tried to break through that support, but the candles are closing back above. So looks like we might need to look on the long side of this tech market.
In terms of the setup for Netflix, Todd, the fact that it was down about 20%, 19% or so from its 52-week high, the longer it's below that 52-week high and the deeper it is below, is that the worst?
The longer the base guy?
In terms of the setup, sort of similar to that, to that thinking?
Yeah. I mean, it looks like they've been beaten down in the subscriber growth for so long. The market was heavily short. I bought into it. I think a lot of people were short, and perhaps this is a combination of, again, those numbers were pretty impressive, really impressive, in fact. Perhaps those shorts are saying, forget it, covering. Maybe it's more like the bull market, sort of this rally that we've seen in technology today in the overall market. Does the market crash 500 points higher? No, there's a lot of emotions that are coming into those shorts, locking in those profits, locking in maybe those gains, but getting out. So when you see a market just rip higher like this in Netflix and in the overall market, maybe in the near-term bear market rally.
All right, Todd, thanks. We'll see you later in the show. Todd Gordon, tradinganalysis.com. Let me ask you a question, Guy. If this stock moved lower by 12% on very heavy volume on the back of a disappointing earnings report, would your analysis of the stock in terms of where it stays be any different from it being up 12%, maybe in tomorrow's session on very heavy volume?
So you're saying if instead of being where we are now, if Netflix retested that level we saw back in the spring, then I would say I would be in sort of in Todd's camp. Broken stock, we're going to blow through that 305 level on the downside and test levels we haven't probably seen in a year or so. And again, in terms of the fundamentals of the company, if you were skeptical on the balance sheet and cash flow, this quarter did nothing to it gave you more ammunition, not less ammunition to be concerned. So the concerns for Netflix haven't gone away. This was the quarter I thought they would report last, in July. It happened now. It needs to retake that 423 level. Otherwise, we might wind up being where Todd thinks it's going.